Hello, traders from around the world. Welcome to this very important video, and this is called Black Friday Risk Management. Now, many traders panicked when the markets crashed this recent Black Friday, November 26th. They found themselves and their capital in danger of sinking below the waters. Okay, and I keep reminding you that 90% of all traders are losers. One of the biggest contributors to their devastating losses is their lack of knowledge in risk management. We did have two losing trades, but because we applied our loss prevention rules, we limited our losses to a minimum. Now, the number one rule in trading is to always protect your capital. It's more than just applying stop losses to your trades, although many traders don't even do this. There are other factors in your trading strategy that can give you an extra layer of confidence knowing that your money is protected even when the markets are volatile, as we witnessed on Black Friday. This video will review this past week's trades and reinforce the ideas of money management in times of doom and disaster. We'll also look at the recent silver trade and how to simply apply the trade levels, the ones I didn't give you. Also, I'll show you how to choose your correct lot size in silver. Make a mistake and it could be costly. Okay, let's jump right into the video. In just a few moments, we're going to look at the charts of the world indices and also the past trades we took this past week. So we're going to do that in just a moment and also show you how Black Friday affected the markets. Before I do that, I want you to just pause the video. You can look at this. This is my humble disclaimer. I'm not a investment advisor or anything like that. I'm just trying to teach you how to trade correctly, so you can just read this over. Okay, and this is me right here. My name is Martin. I'm the originator of the ABC free forex signals, and everybody can receive them. There's no cost, there's no charge, there's no credit card to give me or anything like that. It's just straight free signals, and if you want to get them, then you have to send me your email address to mine. Here it is right here, mskyj007@gmail.com. Guys, I'm a proud Canadian trader. I'm excited to get started, and even though we did have two losing trades, we still did reasonably well in the markets. Okay, so let's get right to it. Okay, and this is this past week. We're talking about the week from November the 22nd to the 26th. Okay, let's take a look. From the previous week before that, there are no trades held over. So this past week on November 26th here, let's take a look. And I did give you two signals. One was the sell Euro USD. It was a winner for approximately 40 pips. Price did hit our first take profit level, so that's fantastic, guys. We're going to look at the chart in just a moment. Then on the same day, I did also mention a sell silver. The symbol for silver on the charts is XAG versus the USD. Okay, so silver trades against the US dollar. This also was a pretty good winner of approximately 59 pips, and I'll tell you how we derived at that as well. I did send you an email to close the trade. I actually thought price was going to retrace after this big drop. It did not. It actually continued going down, so we missed making extra pips on that. We'll look at the charts in just a moment. Here on November the 23rd, guys, I sent you a signal buy the US Japanese yen. Originally, it went in profit by about 50 pips. Did not quite hit our first take profit target, then turned around in a massive way, and it was a losing trade for 99 pips. And we're going to show you the risk management that limited the loss to just 99 pips. So price did hit our stop loss. Okay. And then finally on November the 24th, I sent out another signal buy the Swiss franc Japanese yen. It also was a losing trade. for 36 pips, and this was limited because price actually crossed lower, and it crossed lower and closed below the DTL. Again, I'll discuss that. That is a very important part of our trading strategy. It's called the DTL. Okay. So this recent week, even with these two losses, we only incurred an extra 36 pips in losses. So we really limited this to the downside. And overall, from the start of October, we're now still up 659 pips, even with these two losses. So that's pretty good, guys. And this is part of this week's lesson on risk management, especially when things go really, really terrible. Okay, so let's get on to the charts. Okay, and the first thing I wanted to do again is let's have a quick look at the actual world indices, the world markets, just to show you what Black Friday did to these markets. And for anyone that did not apply proper risk management, you guys were in real trouble. Hold on. Okay, first up, let's take a look at oil. And oil was one of the biggest losers. Take a look right here at this huge candle on Black Friday. It actually, take a look to your right here. It dropped from just under $78 all the way down to 68. That's where it closed, guys. That was a huge loser for any of you guys that were trading oil, okay? And let's get over to the next one. And I believe that's the SP 500. So this is the American market here. Let's take a look. And this, just take a look at that size of the candle, guys, in relationship to the previous candles. Okay, you can see, follow my cursor here. And guys, this was again another huge drop. Okay, so again, guys, this wasn't pretty. And again, if you guys didn't apply your risk management rules, you would have you would have gotten some pretty big losses, incurred some big losses. And you know what? I believe this is just the beginning. I believe price is still going to keep going down on these world markets, okay? And it'll probably hit another support area, but I don't think this is finished. I believe the world markets are still going to drop even more, okay? So it'll be a very interesting week coming up. Let's take a look at another one. And let's get to the Japanese market here. Let me just take that off. So this is the Japanese 225. Let's take a look. Another huge, massive candle. Okay, again, just take a look at the last candle compared to the other candles, guys. And it's just incredible, right? And this is just one day. Now, remember, these are the daily candles. And when I say daily, each candle is 1 day's worth of price movement, okay? So this is not like intraday or on the hourly charts or 4-hour charts. These candles, in fact, are daily candles, and you can see the size of this big drop just on Friday, okay? So let's get on to another one, and this is the UK 100. This is the British market. Okay, and take a look again at this huge drop. So again, you can understand why people that were trading on these indices, why they may have panicked. A lot of them have probably lost a lot of money because they did not have the risk managements in control. And guys, we're going to look at our own charts and our trades this past week, see what happened, and see how we fared. Okay, so let's do that right now. Okay, this was the very first signal I sent out of the like during the past week on November the 22nd. I said sell the Euro USD, guys. Here is the entry. So we got in right here at the close of that candle. Okay, here's the stop loss of 1.1345, and then our first take profit target of 1.1194. Okay, so you can see that price actually from the entry here, price did go up slightly the next day with this white candle, but then went all the way down closed right there and did hit our first take profit target for a winning trade. So this was our first take profit target. Congrats to all of you who took this trade, and we had a winner right there. So again, and then the next day price reversed after it hit our first take profit, and then the next day up all the way. Now, once it hit our first take profit target right here, after we got in, guys, we move our stop loss, and you can see here from 113.45, we move it all the way just past our entry, our original entry of 1.1236, or wherever you got in, you would move it just below that, okay? And if price retraces, then we're stopped out without incurring any further losses. We do this because we always take 2 trades for every trade entry. So we basically open up 2 positions, okay? Each position has the stop loss, and that's part of our risk management. Guys, I want you to pay attention. So if we're opening up our entry right here with 2 positions, splitting the 2 positions in half, and that's with regards to the lot size, and that's important. Okay, so if you're, let's say as an example, you're trading with 4 mini lots or 4 micro lots, then you want each position you're opening up with 2. We're splitting that in half, so 2 micro lots or 2 mini lots each, okay? Each position has the stop loss. 1 position has the first take profit target, so when it hits it, we are automatically close. The trade is automatically closed in profit. The second position does not have the first take profit level, guys, and so it keeps open, but that's when we move the stop loss lower, and so our second position goes back. You can see it went back a bit, and it would have been stopped out without any further losses, and most likely you would have gained a few pips as well. Okay, so really quickly, that is this trade setup, sell Euro USD. Okay, and now we're going to get to the next trade, and that is the one I suggested everyone to take. Sell the silver against gold. This was the silver trade. A lot of you people replied back and said that you didn't take the trade. Others replied back, said you did take the trade, and after, later on when we get on to the actual lesson, I'll discuss the reasons why some of you didn't take the trade, okay? But it's important that you follow my instructions, and if you can, just to open up the trade and take it, you would have found yourself in a really good winning position. So let's take a look, guys. I did not give you these price levels, okay? But this is what I apply to my charts, and we're going to review how to place the levels on your charts even when I don't give them to you. Okay, so our entry right here and that's an easy one, right? Because when the candle closed, I sent the email and I said just to open up a position, a sell trade, right? So that's easy. The entry there, 24.17. First take profit right here, guys. 23.76. The second take profit, 23.38. And our stop loss, the one I applied, 24.75. Okay, so those are the levels, and you can see it hit our, it actually hit our first, it hit my first take profit level, but I did send out at the close of this candle, I sent out another email asking you to close your trade. It wasn't good profit if you took it. So close a trade. I thought because of this long wick here, price might have retraced just a wee bit before maybe going back down. But I did issue an email asking you that if you took the trade, just to close it. It wasn't very good profit anyway. So no complaints there. Okay. So that was that. And let's take a look at the next trade I issued, and that was the buy USD Japanese yen. Let's just take that off. Okay, so when I send out an email for a trade signal, I send out this information here, guys. All you have to do is follow the instructions. I do give you the buy entry, the first take profit, the second take profit level, and also the stop loss. Okay, right here, I've graphically depicted it, this on the chart here, and you can see that our entry was right here at the close of this white candle. That's where I said buy the US Japanese yen, okay? And here's our first take profit level right there and our second take profit level, okay? You can see once we entered right there, price did go up right there, guys. Price went up. I think it was around 50 something pips. And I thought for sure we were going to hit our first take profit level, 115.67. It didn't, and actually reversed with a small black doji. And then on Black Friday, take a look at this, guys. The candle just dropped like a rock. Okay. But this is where risk management comes into play. So even though this was a huge price drop, okay, we did not incur the entire loss right here, guys. Okay, the entire loss would have been if we would have waited to here and then close the trade. But instead, guys, we automatically stopped ourselves out because we had the stop loss of 114.13. So right over here, guys, is when we got out automatically. If you would have had the stop losses on your trades, which I always tell you to do so, right? So for whether you open up one position or two positions, you always have the stop loss. In this case, 114.13 would have been stopped out, and we would have minimized our overall loss. And that is one way. Obviously, having stop losses, that is very important. Okay, so anyways, that was a losing trade, and let's get on to the next one. Let me just take that off. Okay, and the next one, the buy Swiss franc Japanese yen, and again you can see we got in. Let me just mark the chart here. Our entry is 123.55 right here. I admit, guys, this was not a good call on my part. I went through some of the technical analysis again the other day, and I found that this was a weak signal. It wasn't that good. I was actually playing off the fundamentals, basically understanding that the Swiss franc was right here was gaining in momentum and also strengthening, and that's the reason why I thought for sure if we got in here, price would have hit our first take profit, possibly even our second take profit. And instead, it hit this, you can see this blue zone right here. This is a blue resistance area right here. Price went up and then just fell like a rock, especially on Friday, Black Friday here with this big candle. Let me take that off for a second. So we did get in right here on that, right here, guys. The next day, price dropped right here, and guess what? I'm going to mark this up right here on this candle. I sent out the email asking everyone to close this trade. Why? Because price crossed and closed below this DTL line. You see this DTL right now I'm drawing? Okay, so that's a moving average, guys. Put this on your charts. It's the 21 EMA, okay? And when you get into, as an example, a buy trade, okay, in this case here, a buy trade hoping that price will go up. If it reverses and crosses back across the DTL line, we get out early right there, guys. And that is another way of limiting our losses. And then you can see we avoided this huge black candle on Black Friday there, guys. We were already out the day before. So guys, this is so important. Risk management is one of the keys to successful trading. And if you don't understand the simple concepts, then you're not going to do very well at all. In fact, it's going to be doom and gloom for you. And if you, ignore even some of our advanced ideas, as taking a look here when price crossed again below the DTL line, closed below the detail, that's an early warning that price may continue going down. And to close your trade early, not even waiting for the stop loss right here. We did have a stop loss of 122.76, but when we close a price early because it crossed below the DTL line right there, then we eliminate all this extra heartache. Okay, so that is that. Let's get on to our lesson. Okay, and we're going to take a look right here. Taking the silver trade on November 22nd. Now, on that date, I also said I'm going and take a look. This is right from the email. I'm also going to take a sell silver against USD. I'm not going to give you the levels. You can take this trade only if you are somewhat experienced and confident. Okay, so this is what we saw right here, guys. When you saw this black candle, we didn't see anything after that. On this particular date, I said I'm going to take the sell silver versus the US dollar, and I asked you to follow along, guys. And again, some of you did, some of you didn't. So it ended up being a really big winner because price did end up going down. Okay, so anyways, that was that. The reason, I guess, is because a lot of you don't understand how to read the pip value for silver. Okay, it's actually quite easy. I'm going to go back to the chart again just to show you how you would fill in the levels. Okay, the entry is easy, of course, because right here we would have gotten in, right? Because this is when I sent you the email. But then what you didn't know is exactly where to put the stop loss right here. Stop loss, your first take profit target, your second take profit target. Okay, so we're going to look at how to do that in just a moment. Okay. Now, the reasons for not taking the silver trade could have been many, but these were the top three as far as I could think. First of all, you decided not to follow the most important instruction, which is to take every trade signal, right? So that is one of the things I ask everyone to do. When you're following my free trade signals program, take every signal. Don't decide which ones you're going to take or not take. Don't choose on your own. Just take the signal. And again, even if you're not sure of the lot size or where the different levels are, you can always just take a trade based on one micro lot or the smallest size that you could open a trade with, right? And try to just choose your own, at least your first take profit level. Of course, the stop loss is very important. And all of the levels are based on the ATR, right, guys? So we're going to look at that in just a second. Second, the next thing is specifically you weren't sure of the trade levels, which I just talked about, the stop loss, take profit 1, take profit 2 levels, and therefore you decided not to trade. And thirdly, you weren't sure of the exact lot size to trade with. Again, you can always open up with the minimal lot size, which would have been 1 micro lot. Therefore, again, you did not take the trade. So these are some of the reasons that you guys did not take the trade. In some case, a couple of cases, and I find this a little bit odd, you couldn't find or the broker doesn't allow you to trade silver, gold, oil, or some of the other indices in that. Okay, some brokers are like that where they don't do that. They don't allow you to trade commodities and things. And then again, for some of you, I know in the past, I'm not too sure recently, but you couldn't even find them on your charts or where to find gold or silver. So these are all important things that you guys got to resolve. Learn how to use your MT4 charts and learn a little bit more about your broker, whether your broker allows you to trade or not. Okay, so that's all important. Now, let's take a look. Placing the trade levels again. Okay, it's based on the ATR, guys. Again, this is fairly simple. these are the different levels I placed on my chart. Once you understand the ATR and how we do the levels and apply the stop loss, it's fairly easy. We're going to do that in just a second. So you can see here the entry was easy because it was the same at the close of the candle when I sent you the email. So 24.17 was the entry, and it was a sell trade. So basically, we could say take this entry right now, or wait till price goes up just a wee bit, and that's what when I say enter at this level or better. So wait for price to retrace a bit, then get in at a slightly higher level, and then take a sell trade to go down, right? So the entry was simple. The stop loss 24.75. The first and second take profit target you can see right here. We're going to show you how I did that. Okay, and let me just take that off, and let's get on to my another chart where I can actually show you the picture. Figuring out the levels with silver is pretty easy. Again, it goes by the ATR, but let me just take a look. If you put your mouse right on here, okay, the ATR reading is approximately 58 pips. Okay, that means on the average over the last 14 days, each candle has moved like its daily range approximately 58 pips, okay? And you would get that by having the ATR indicator on your charts. Take a look right here, guys. So again, see, there's the candle right there. If you just place it there, do you see? It says here ATR 57.6, okay? You see that below there, ATR 14, 0.576, so that's approximately 58 pips. Okay, let me just close that down again. And so it's pretty easy. I calculate the stop loss at approximately 1.5 times the ATR. So if the ATR is 60, then 1.5 times is 90 pips. But in this case, I just did 1-to-1, but I will show you something. So here is, we would calculate the stop loss from the close of the candle, our entry, which is right here. Okay, you go up 90 pips. That's the first two numbers. Look at the middle numbers. 81 is climbing. Okay, there's like 90 right there. So your stop loss really at 1.5 times the ATR would have been approximately at the level 25.04. Okay, instead I just put it down to 24.75, so approximately 1-to-1. Okay, here's your entry again. Your first take profit. I normally am conservative. Okay, I'm not a risk taker. Risk takers want more money. Conservative people are happy with a little bit less money. So I calculated approximately 70%. So 70% of 60 pips is approximately 42 pips again. Okay, and so here's our entry again, 42 pips down. You can see, and would be approximately 23.73. I had it at 23.76. Okay, and then I just double it. So if again it was 42 pips for the first take profit, an extra 42 pips for the second take profit. Okay, and let's take a look. So that would be 84 pips in total from our entry, 84 pips. So it would have been approximately 23.31. Take a look at the level in white there. I put it at 23.38. Okay, so that's how you do it, guys. You find out what the ATR of your entry candle you were entering at the close of this candle. So here it was 60 pips. Then 1.5 times above that would have been your stop loss, and approximately 70% of the ATR. So 70% of 60 is 42. Would have been your first take profit target. Double the first take profit target of 42 pips from your entry. for 84 pips, and that's how you get your second take profit level. You can do that pretty well for all currency pairs, for everything pretty well. That's what I normally do. If you're a little bit more aggressive and you want more pips, then you can go, instead of 70%, you can go for an 80% or even 1-to-1, okay? And so that's basically how we got the levels. You should have been able to do that, guys, because most of you have been watching the videos, and in the past I've talked about this and showed you this many times in the past, okay? Okay, you can calculate silver. The lot size in the two different ways, and the first way is by volume size, which some brokers do. The lot size is determined by the minimum contract size that they want you to trade, and the minimum is 1,000 units, okay, of the base currency, in this case silver. So example, if price moves $1 from $24 to $25, this is a 100 pip move. So this is the important part right here. One micro lot, which is the smallest amount that you can open a trade with, is 1,000 units, or it's seen as or written as in the volume, because this is the lot size 0.01 and it's 10 cents. So what that means is that for every pip price moves, you make 10 cents. And for this move here from $24 to $25, you would have a total profit of approximately $10. Okay. Now the next size is one mini lot. That's 10,000 units that the broker allows you to trade, and that is seen on the trade window, and it's in the volume. I'm going to show you that in a minute. The volume field that you would type in when you place a trade is seen as 0.10. That is one mini lot. And so for every pip it moves, you're making $1. And for this particular move from 24 to 25, you're making $100 profit. Then the largest size is the one standard lot. And I'm sorry, I'm going to just type this in, but it's actually 100,000 units, okay? Or $1. It's seen at, well, not $1, 1.00. That is one standard lot, and that's $10 a pip movement. So for every pip it moves up, you would make $10. If it moves up 100 pips here from 24 to 25, then you would make $1,000 profit. Okay, so that is one way of determining the lot size. Some brokers do this, but the more common way, and a lot of you using Black Bull Markets or other brokers, and I'll show you the difference. The second way is the volume size times 5. It sounds a little confusing, but I'll run this by you right now. Many brokers do it this way. The lot size is determined by the minimum contract size of 5,000 units this time, not 1,000 units, as in the first way to determine the lot size. So you're going to have to check with your broker, but there's you can open up your MT4 charts, and I'll show you how to do this to find out whether your broker is allowing you to trade the 1,000 units or the 5,000 units. You can do this by opening up your charts and finding out for yourself, and we'll do that in just a moment. So here's an example. Again, the same thing. Price moves from $24 to $25. It's a $1 move. Again, this is a 100 pip move. And a micro lot this time, instead of being 10 cents a pip move, as in number one, okay, the number one method, you now have to times that by 5. So one micro lot is now actually 50 cents. Every pip it moves, you're making 50 cents, okay? Now, the one micro lot is now $1. Again, you can go back to method number 1 and the other chart, take a look. But instead of $1, it's now times 5 and now worth $5. So again, on Black Bull charts, Black Bull Markets charts, and many other brokers, this is how they're doing it, okay? Because they're equating this times 5 really based on the amount of minimum ounces of silver you're trading. So that's why it's times 5. And again, so one mini lot now is worth $5 and one standard lot is worth $50. So on method number 1, it's $10 a pip movement. So for every pip it moves, you make $10. But now on this times 5, one standard lot is not worth $10 a pip movement. It's worth $5, 5 times 10, which makes it $50. So for every pip it moves higher, you're making $50. And so when price moves from 24 to 25, that's 100 pips, you're making $5,000 profit. Okay. Here, when price moves from 24 to 25 and you're trading with one mini lot, you're making a $500 profit. So again, I just want to show you one more thing. If you're trading with 3 mini lots, then it would be 3 times 5. So it's now $15 $15 per pip movement. Okay, so for every pip it moves in your direction, you're making $15. You just got $15 a pip. Okay, because you have to remember here, this is for one mini lot. For 3 mini lots, 3 times this is 15. One micro lot is 50 cents. For 3 or 4, let's say if you're trading with 4 micro lots, it's 4 times 50, it's $2. So for every pip it goes in your favor, you now are making $2 a pip. So you can see this kind of can be a bit scary. You need a little bit more money in your account to be able to trade silver and of course gold, oil. We're gonna, for the commodities, you have to have a little bit more money, and that's maybe another reason why some of you didn't get into the trade, because you don't have a larger account balance to be able to do this. So hopefully you understand, guys. And I want to go on to the next slide, which shows you how you can determine what your broker is allowing you to trade when it comes to the contract size. Let's take a look right here. So when you open up your MT4 platform, guys, take a look right here. So to find your broker contract size for the pair you're trading, and in this case silver, right click on a symbol. Okay, so here's the symbol. Look for XAG USD. Right click on that with your mouse. Okay, and then look for that opens up a window. Look for specification right here. You can see in number 2. Okay, and then the third thing is when you click on specification, this window opens up, and look at the contract size right here. You can see contract size. In this case, it says 1,000. Sometimes I work without my glasses and I put my glasses on. So this is a screen capture from another broker. Okay, but again, just letting you know, black bull markets and most or many other brokers, this would not be 1,000. It would actually say 5,000, and that's where you get the times 5. Okay, so that's the first thing you should do. Whatever broker you're using, go to your MT4 charts, right click on the symbol for silver or any other commodity that you're trading, and it'll tell you the contract size, and then that's how you will figure out your lot size based on my previous slide. So hopefully that makes sense, guys. It's not that confusing. Just go over my slides once again, and you'll understand it. Now, again, this is important. When you're actually placing a trade, this is what you're concerned with, the volume. You're going to input your lot size here. So this 0.30, what does that mean? I'm sorry, mini lots. 0.30, it's mini lots. So if after the decimal point, whatever number you have in there, whether it's 1, 2, 3, 4, 5, 6 or whatever, that's for mini lots. If it reads and let me just do this, if it reads 0.0 and then 2, okay, that is 2 microlots. Okay, so this right here is for microlots. This is after decimal. So second number after the decimal, this is for micro lots. This is for mini lots. And if you are lucky enough to trade with standard lot sizes, that is this first number before the dot, okay, before the decimal point. So again, standard lots, mini lots, micro lots, you would put in the right number here. And that's why I say warning, watch out. Make sure you put in the right number, write it down properly, especially when you're trading commodities, and silver is the lesson for today. Okay, so um, so that's it, guys. This is really important. You're always, when you open up a trade, you're looking for the volume. You input that, and then you can click on buy or sell. Okay, so we're done, guys. Hopefully, this wasn't too confusing for you. Hopefully, you gained a lot from this lesson, and now you know how to trade silver. If you want my free trade signal, send me your email address, and I'll put you on my VIP list. Send it to right here, guys. This is my email, mskyj007@gmail.com. Right here, mskyj007@gmail.com. Okay, so you've got to send me your email, and when you do, tell me what country you're from. Give me your first name, okay? And I would really appreciate that. So that's it, guys. We got through Black Friday, and hopefully you guys did as well. And we look forward to the next time I meet you, the next video. Cheers from Canada again. This is me. Don't forget to subscribe and hit on the subscribe and the bell links below the video. And also send me a comment. And I'll get back to you. Also, hit the like button, guys. I really appreciate that. It lets me know that I'm doing a fairly good job, and that you want me to continue. So hit the like button below the video, and I will see you next time next week. Bye for now.